We've been looking for financial power in all the wrong places. The real center of gravity is in Basel, Switzerland. It's called the Bank for International Settlements, the BIS. It's the central bank for central banks. And its story, born from the ashes of one world war and surviving to navigate the crises of today, reveals an uncomfortable truth about who really controls the levers of our financial system. A questionable birth, peacemaker or profiteer? Visuals shift to black and white historical footage, ruined European cities post-WWII. Politicians arguing at the Hague Conference, newspaper headlines about German reparations. Our story begins not with noble ideals of stability, but with the bitter fallout of World War I. Germany was crushed under impossible war reparations, leading to hyperinflation and political chaos. By 1929, the Allies formed a new committee, led by American Owen D. Young, to find a final solution. Their answer was ingenious and controversial: create a new neutral bank to handle the messy business of German payments. It facilitated transactions for both sides. Most notoriously, it was instrumental in shipping gold, looted by the Nazis from occupied Europe through its vaults, to be sold abroad. The Bank for Peace stood accused of banking for war. The Phoenix reinvention and the rise of soft power, the Bretton Woods Conference, 1944, followed by shots of 1970s stock tickers and the fall of the Berlin Wall. The mood shifts from post-war reconstruction to chaotic growth. After 1945, the BIS was toxic. The victorious Allies, led by the US, voted to liquidate it at the Bretton Woods Conference. This was the turning point. The BIS pivoted from doing banking to talking about banking. It became the ultimate backroom. Here, away from the glare of politicians and the public, central bankers could speak freely. They shared data, confessed vulnerabilities, and forged a consensus. As one academic paper noted, the BIS attracted the intellectual resources to analyze international problems in a thoughtful and deliberate manner. Unlike more politicized bodies like the IMF, its power became the power of ideas, codified into standards. The most famous of these emerged from the Basel Committee on Banking Supervision, a BIS-hosted group. Basel, I2 and 3, became the global rulebooks for how much capital a bank must hold to guard against failure. These weren't laws. No country was forced to adopt them. But through the consensus built in Basel, they became the global norm. The BIS had mastered a new form of power, soft power. It didn't command armies or pass laws. It set the rules of the game. The breaking point: theory versus reality in 2008. Fast-paced montage of the 2008 crisis. Lehman Brothers collapsing. Frantic traders, bailout headlines, protest signs. Then, the system it helped design was stress-tested to its limit. The 2008 global financial crisis exposed a fatal flaw. Banks had followed the BIS's complex capital rules to the letter, but they were packed with toxic mortgage-backed securities and derivatives. The rules were gamed. Risk wasn't contained. It was hidden. The theoretical frameworks developed in quiet Swiss meeting rooms shattered against the reality of panic. Central banks, the BI's members, were forced to step in not as subtle influencers, but as actors of last resort. They became the lender of only resort, injecting trillions into the system, the largest liquidity injection in history. The Fed, the ECB, and the Bank of England transformed from referees into the star players, buying up toxic assets to prevent total collapse. The aftermath was a massive failed fix. New regulations like Dodd-Frank in the US and the Basel III Accords were launched, Signature Bank failed days later. Their business models relying on uninsured deposits and long-dated bonds that lost value as rates rose weren't hidden by complex derivatives. They were simple, and regulators missed them. This wasn't 2008. This was a digital age bank run, supercharged by social media and instant withdrawals. Yet the pattern was identical. 1. Asterisk, asterisk, regulatory blind spot. Asterisk, asterisk, the risks were visible, but downplayed. Asterisk, asterisk, sudden, contagious collapse. Asterisk, asterisk, fear spreads at light speed.
3.
Asterisk, asterisk, the central bank cavalry. Asterisk, asterisk, the Fed rushed in again, creating a new lending program. Meanwhile, the BIS continues its work, now focusing on digital currencies and climate risk. But the core tension persists. As JP Morgan analysts warn, the growing mountain of global government debt creates a powerful incentive for politicians to erode central bank independence, to pressure them for lower rates that devalue debt through inflation. The very independence the BIS relies on to function is under threat. 3 unshakable truths. The narrator speaks directly to the camera in a more intimate setting, with subtle graphics reinforcing key points. So, what do we learn from this century-long story of the world's most secretive bank? Real power isn't about control, it's about consensus. Asterisk, asterisk, the BIS doesn't rule by decree. It rules by creating the handbook that every major financial regulator on Earth voluntarily follows. Its authority comes from being the one place where all its competitors agree to meet. The system is permanently in tension. Asterisk, asterisk, the BIS and central banks walk a perpetual tightrope. Their goal is long-term stability, but they are constantly reacting to short-term political pressure and market panic. They are the firefighters who are also accused of pouring gasoline by keeping rates too low for too long. We built this because we have to. Asterisk, asterisk, the terrifying truth the BIS represents is that the global financial system is too complex, too interconnected, and too fragile to be left to pure national politics or market forces alone. We created a temple for technocrats because the alternative, a world with no neutral meeting place, seemed even riskier. Final shot returns to the closed, gilded door of the BIS. Music becomes more ominous, thoughtful. The call to action isn't to storm the gates in Basel. It's to look past the simple headlines about interest rates. It's to understand that the value of your money, the stability of your job, and the health of the economy are influenced in rooms you'll never see, by an institution whose name you might have just learned for the first time. The door is closed. But what happens behind it? Now you know.